We are having this very special chat today with Ajay Piramal of Piramal Enterprises on host of issues, starting with how is analyzing the NBFC situation, how does the company Piramal Enterprises stand right now, and what kind of opportunities lie ahead for the company, for the group. Mr. Piramal, thank you very much for this opportunity to chat with you right now.
My pleasure.
So, in the last week and a half, NBFC in particular, financials space in particular, has come into the eye of the storm, and now things are gradually settling down. How are you analyzing the situation right now as we stand overall for NBFC situation, and how much of it is actually liquidity situation, or is it crisis of confidence, or it may not be as big a problem as perhaps some of us are making it out to be?
So, the NBFC situation today is in a difficult situation, if I may say so. It's not as much as that there is no liquidity in the system, but it's more a crisis of confidence. It all started with, as you are aware, with the ILFS scenario coming out into the open. I think what people are not appreciating is that ILFS is basically more of an infrastructure company. Out of the total loan exposure, which may be somewhere in excess of 100,000 crores, I think to my understanding, the NBFC book is only 20,000 crores. Most of the assets that have been, or most of the loans that have gone into ILFS have been in either in the road sector through ITNL, or in the power sector through the investment in the power project in Cuddalore, and in certain other infrastructure areas. So, I think we have to segregate that, but unfortunately it's been only portrayed as NBFC. And I think therefore the situation has in the NBFCs, what's happened is that for a majority of NBFCs, with the exception of a few, the banks have now stopped, their limits have been virtually frozen, and mutual funds are also pulling out a lot of the funds that they had invested in some of the NBFCs. So, consequently, that there is a crisis as far as I can see in many of them.
So, but at the same time, I'm sure you would agree that NBFCs in the last couple of years have played a critical role in spreading of credit available for, be it medium-sized corporates, retail consumers, etc., in the tier 2, tier 3, and even smaller towns across the country, where PSUs were unable to do so because of the system got choked. So, this liquidity situation which has risen in the last 2 weeks, do you think it's relatively temporary in nature, and gradually wholesale funding will have to be released to those NBFCs which are getting their processes in order and doing the job well, or you think permanent hit to business models of a large section of the NBFCs?
No, actually you raise a very important point. The fact is that of the GDP today of the country, 31% of the GDP is contributed by the SME sector, and 26% of all employment is done in the SME sector. But if you look at the data, you will find that the banks have only funded to the extent of 6% of the funding has gone to the SME, and therefore most of the growth that is taking place in the SME sector is been because of the funding by the NBFCs. And if this funding gets choked, the whole economic activity of the country can also come to a halt. And therefore, it is very important for the whole system to get together to see how we can tackle this issue. And that's where I feel that if we can get the Reserve Bank, the big banks, whether in the public sector, private sector, other lending institutions such as the LIC, the National Housing Bank, NABARD, and Finance Ministry and other officials to get together and talk through these issues. Because if we don't settle this, there can be a crisis. And in the past as well, I have seen, whether it was in 2008, whether it was in 2013, when liquidity was drying up in terms of the mutual funds and in NBFCs, the Reserve Bank and the government had taken special measures. So I think we need to act now for this as well.
Very quickly, I'll just take the clock back. In your investor day, Piramal Investor Day, I believe you had given some indication that you were observing some signs, the way business was being conducted in this space, which gave you some amount of indication or that probably things may blow up in the near term. What were those signs which you observed? And sitting now, how are you envisaging things to pan out for the sector in next 2-3 quarters?
So at that time, in fact, I had warned to some extent that I was seeing that the NBFCs, that there were many new NBFCs which were sprouting up, and many of the existing ones also were giving loans at, there was no risk adjusted return that was being taken into account. They were not taking into account the risk, which was just trying to build their book, because the valuations were very attractive in the market. And hence I said that it is possible that you will get a blow up, which is what has happened much earlier than what I thought. But therefore, I think there are issues with NBFCs, let's accept it. Many of them have issues. But I feel that today is not the time to attack all of them. Today is the time for the whole system, actually, including, if I would say, the media, as well as I said, all the authorities involved, to see that we build back confidence. It doesn't mean that all are bad. Today, every NBFC is painted in a bad way. And if we want the economic crisis to get over, if we want the country to go ahead, we need to get together. Even a month ago, India was on really a roll as far as the economy is concerned. We were meeting so many foreign investors, all felt that India was the best market. Now, thanks to some external issues, just as because of the oil price hike, the rupee has taken a beating because of certain other measures taken by other countries. And then that these are external issues. Add to this the NBFC issue, and that's where there is a problem, and we have to get together.
In fact, things actually are getting improved each passing day. Now liquidity, several of your industry peers also are reporting that money is being dispersed to them and sanctions are happening, and for a day or two there was an absolute freezing of liquidity, but now we are also getting signs that money is back in the system. How are things standing right now for your own company, be it for liquidity, for business visibility right now?
So fortunately for us, since we had predicted this a while ago, and I had also said that we have enough equity and we have been conservative as far as equity and our debt equity ratios are concerned. Therefore, sometime in the end of last year, we had raised 7,000 crores in terms of equity. That itself was the largest equity raised by any non-banking financial company. So that was a QIP where we got really high quality investors. These are all long-term investors. So that was one part. Secondly, so today we have almost 20,000 crores in terms of equity, which is in the financial services business, which gives us a strong base. The second thing, if you see, as far as we are concerned, is that the promoters have got a significant stake in the business. So we are like 50% in that area, which is a large amount. And there is no pressure as far as the short term is concerned, as far as the promoters are concerned, in terms of share prices going up and down. Third thing I think is that the quality of the book that we have, we've been the most conservative. If you look at it, our gross NPAs are today only in the 0.3, 0.4% range, and we've provided for much more at 1.8%. We have a very robust risk system as well. So I feel that we are in a good position, and the fact is borne out that even in this most challenging, talked about the 2 or 3 days where there was a lot of tension, we've been able to still meet our commitments for both disbursements as well. So in some ways, if you look at it, if I looked at it only as a personal think it's in crisis that you separate out the men from the boys. So in some ways it's good for us, but I don't think it's good for the country. So today we are in a good position, and what we have been saying for a bit and what we have been preparing ourselves is actually playing out.
In fact, that brings me to the next question. Your asset quality numbers, return ratio numbers are absolutely best in the sector, even globally comparable. But one niggling fear in the last couple of weeks which has emerged is that your overall book's dependence on the infrastructure / real estate space makes some section of the analysts slightly nervous. What would you like to tell them, something about the profile of these developers you work with or your relationships with them?
So as far as we are concerned, our book is started with real estate lending, but today is diversified. It's a book which contains both real estate as well as the corporate, other than real estate, other corporates, both in the large and the small and medium scale sector. We've also gone into consumer lending with a housing finance. But coming to the real estate, which is still a significant about 35–40% of our book, I would say that what our strategy right from the beginning has been, first of all, we only go for the top A-class developers. And why do we go for A-class developers? Because we believe that these are the people who have the maximum skin in the game, and these are the ones who want to survive over a longer period of time. So they will not easily default. And this has also been borne out by the fact that after RERA and all, you will see that these are the only ones which have survived. And we had kind of anticipated that in a crisis, it's the strong who survive, and these will be the ones. Second thing is, as far as real estate is concerned, we do have a good understanding of the business because we ourselves have been developers. Yeah. So we've been on the opposite side. We know what the challenges of development are. We also know what where funds are needed, what things can go right and what can go wrong. So we build all that into our system. And then we are a very systems and process driven business, whether it is risk, which reports directly to the board, whether it is legal, which reports directly to the board, where our investment managers and all are thorough professionals who will take as much care. So these are some of the things that we do which are actually different from what many other companies do, and that's one of the reasons why we've been able to actually have a good let's say good results, both in terms of ROE as well as in the quality of assets. And many people raise the question, you've given to some large builders large amounts of funding, how do you manage that? And we have been actually very open and transparent. We've seen we've been able to share what businesses have been with the developers and how we've been able to recover funds.
Mm-hmm. In fact, talking of your ROEs and asset quality numbers, we also understand that to your top executives in the company who are executing businesses, you actually do not give growth targets, but the targets are in terms of return ratios, asset quality levels. What's gone behind that kind of a thinking?
So our belief is that what is the role of the board? And that's important to understand. So I look at it as the main role of the board is to first of all ensure that risk is managed in the system. The second thing we want to ensure is that for risk means it is also therefore the asset quality comes in. The second criteria as far as we are concerned is to see that we get an adequate return on equity. Third is, again, it actually comes as part of risk, is to ensure that there is liquidity in the system and that these shocks we can manage. And fourth is selection of the right people and to see that the values and the culture. That's what we try to do. Also, we must appreciate that I don't think there is any other large NBFC where promoter stake is so high. So if we are lending 1 rupee, then remember that 50% of that equity is with promoters, and I don't think there are other promoters who have that. Also, what's important to note is that we have never diluted. So therefore, we always remain committed to growing the business. In fact, last year when we raised money through a QIP, as I said, 7,000 crores, out of which 2,000 crores was a rights issue, because we as promoters invested fully in it because we felt that the long-term future is there for this company.
Sure. Mr. Piramal, MSME is another area that you have given indication to the market is a focus area for the group. When you interact with your managers who are dealing directly with these MSMEs, medium-sized corporate across the country now, what is the feedback you are getting from them in terms of a business confidence, in terms of visibility of their own businesses, because that's what they are coming to you for credit. If you could give some sense on that.
So, frankly, the business climate is actually quite good. When I see that the demand is, by and large, it is much better than it was last year. The issues such as the issues of GST and all which were there that last year have now panned out to become, it has actually been a positive for all those people who want to have a transparent system of dealing. I see also rural growth and rural demand coming up thanks to all the efforts, whether it's the direct benefit transfer, whether it's the increase in the MSPs, whether it is in terms of the rural connectivity. All these are positive signs as far as the economy is concerned, and the economy is actually all set to grow. That's why you're seeing the numbers of nearing 8% GDP. I think it's these other shocks that have come in which are affecting us, which we discussed earlier.
In fact, the group's visibility on growth was also reflected very nicely in the over 100-page presentation which you had put out on the Investor Day. Again, one of its kind. We have not seen many companies go that much in detail in your business segments. But shortly, in the last 2 weeks, some of your industry peers have actually scaled down their own growth targets, and these are also the same players which have target audiences similar to yours, the MSMEs, the CV financiers, infra players. Do you see that the growth trajectory, it may be required to scale it back a little bit compared to what visibility was 3 weeks, 4 weeks back?
So, as I said to you, we don't have growth targets, and we are not focusing on growth. It is really on the ROE and the risk. And yes, I think it's reasonable to scale down some of the growth anyway, because one shouldn't be caught in any liquidity issue. So we'd rather focus to ensure that our risk is mitigated. And that, in that sense, we've always done that. So our ALM and all that, there has not been a mismatch in that, which is one of the reasons why you find that some of the companies have actually got affected.
What about the housing finance opportunity? You were relatively, as a company, slightly late entrant, some people say it. Others say that the runway for housing finance is such a large, even from current levels, that if you got your processes right, you can also gain reasonable size. How do you analyze the
So
things?
we think that the housing finance has got good opportunities. You're right, there may be more than 80 or 100 housing companies. A lot of them have come up of late. But if I'm not mistaken, there are only 5 housing companies which have a book size of more than 10,000 crores. So it's not that there are many small ones. And the fact that we have closed, and we've also realized one thing is that housing is not a business to consumer selling as much as a B to B to C. In other words, the developer in between also plays a significant role. Now we have been we've had deep relationships with the large developers who are the ones who are really selling in this market. And we find that that has been a big advantage for us. Our close relationships with developers has helped us build a book which is in excess of 2,000 crores in almost just about a year. So that itself is a good number. Second thing is that we have an advantage. The incumbents did not have the access to technology, and which we have now got. And technology has moved so much ahead So therefore, we can also disrupt in some ways the whole system. So all this means that we are pretty confident. And frankly, with this crisis, what I am finding is that some of the irrational behavior of some of our competition, where rates were really lowered and there were many new people coming in, that will and has been actually restricted. So it should be a better opportunity.
So because of the disruption which you are aiming at on the back of technology, because of the environment getting relatively challenging, there would be some amount of shakeout is bound to happen in the industry. If this happens and some of the smaller players in NBFC space may come down to getting or perhaps feeling this need to merge with some of the companies, would you look at some of these companies on the table at the right valuation? Is inorganic also a part of growth strategy now that the environment is shaped?
So till 4 weeks ago, I would have said that, and I had said this, that inorganic growth for us in the financial services sector is not a means to grow, because I had said that because of the culture, it's really a people-driven business, and therefore you need to ensure that the culture is matches and the values match with you. And secondly, because the valuations were high. Since then, what has happened is that the valuations have come down. But again, unless and until we are very confident about the values and the culture of the people, and we understand the quality of book, only if these two are satisfied, we could look at it. But I would err on the side of conservatism and not do any merger or something, unless it's so compelling a thing. Sure. So that's how we look at it.
Okay, let's shift focus and talk about the pharma end of your business, which has also become the runways opened up after September. So what kind of plan do you have there, especially in domestic formulation side?
In the pharma, our business, just to take you back, in 2010, when we sold our domestic business to Abbott, we still had some businesses. So one was a global business which was in critical products, or really complex generic products which are globally done, not in India, sold, and a lot of it manufactured abroad. The second thing was in doing contract manufacturing and services for global companies, and the third was the OTC in India. So all these three have actually played out as we had thought it was, though you find that there is a stress as far as generic companies in India are concerned in the US, because these were just virtually vanilla pills, or people who had just filed ANDAs. Now that whole scenario has changed. But for us, because it's complex generics, there's not as much competition, and there is not as much pressure on pricing. So that has turned out for us to be good. Our unique model in terms of having manufacturing services and manufacturing plants in the US, in North America, in Europe and India has also played out well for our manufacturing, for contract manufacturing for global companies. And the OTC has also grown well. So now with this, are we looking at domestic branded generics in India? Yes, we are looking at it, and I've said this before, that if it makes valuation sense, then we would look at it. I don't think that we will go in for a greenfield entry into domestic formulations, but if there is a acquisition that we can do which makes sense, we would do it.
So talking of greenfield, are there new areas, be it in finance or NBFC space, which you are also looking at focusing? ARC, I believe, is one area of your interest.
So ARC, we've already we've got a fund, what is called the India Resurgence Fund, which is a joint venture between Bain and us, and that's looking at stressed assets, and that has got off well. We'll be soon, we are looking at many assets, and I think we will be in announcing in the very near future a few deals that we have done in it. Besides this, as I said, we are looking at diversifying our book. today it is more wholesale dominated. That we have got into housing finances. That's our first exposure into consumer lending, and with this as a base, we will add on newer products in to make it more consumer lending. We are also looking at certain other funds that we have. Today we have a real estate fund which is with providing private equity to real estate companies. We have this India Resurgence Fund which is for stressed assets, and we are looking at certain other funds in renewable energy and infrastructure and all. The good thing is that we have partnerships with some of the best in our financial services. So whether it is a partnership with CDPQ, whether it's a partnership with IFC, whether it's a partnership with other APG, these are large investors who are backing us and gives us the strength to do many more things.
In fact, sir, my last question would be on those lines. A lot of people in the market also look at Piramal Enterprises as the Berkshire Hathaway of India, because not only does it have operating businesses, but it's got investing arms also, which work as a full-time investing business. So what's your view on valuations on in Indian market in the corporate side, not only the listed space, but asset valuations, be it unlisted or listed overall?
So if you look at what's happened in the last 5-6 weeks, it's like mayhem in the markets. I think valuations have come down and they are attractive today.
So which are the pockets, be it financials or pharma or mid?
So I'm not
an
I'm not an expert
Sure,
on the
sure.
market, but I can only say that there are. So we keep. I mean, so our own belief has always been that it's only in crisis that you get opportunities, and we have in the past as well converted crisis into opportunities. So I think there are many opportunities for all of us.
All right. On that optimistic note, Mr. Piramal, thank you so much for chatting us, and we really enjoyed it. Thank you very much for your time.
Thank you, Ajay.